Good morning, traders. It's Tuesday, January the 14th. Taking a look at the charts. Markets shaking up a little bit this morning. Overall, equities are down just about a tenth of a percent, but we're seeing the metals start to move a little bit. I'll cover that in just a second. But looking at the SP 500, we're holding above this light blue line here. This is the 5-day moving average. Generally, when you're above it, we should expect the market to continue to rise, have a couple side days, and keep grinding its way higher. And that's where we're at. We're seeing the market continue to move higher and just continue that trend. Now, obviously, if money is piling into stocks, it's usually got to come from somewhere, and that's been coming from more or less. It's a little bit from bonds. But more so precious metals. If we take a look at precious metals, they have been pulling back while the equities market has been moving higher. And this morning we've seen some pretty good volatility in gold and silver. Gold was down fairly sharply this morning and it's rebounding. And overall, if we look at the price action here, and we go from the past price action, we can see we've had sell-offs, and then you have a bear flag, you have a sell-off, you have a bear flag, started to sell off, tried to find support and build a base, but then broke off, formed a bear flag, and then came back down, and then finally put in a double bottom, and now we're in the inverse type of move where we've got a rally, we've got a pullback, we've got a rally, we're having a pullback, and overall the price action today where we've seen the gold sell off and start to come back, we'll see if this is potentially the start of a move higher. But I do feel as though, grand scheme of things, this could flag out for a little while longer. I know a lot of people, I mean, this was a news-based spike, big price action, tons of traders got pulled in, sucked in up at near these highs, and of course it's pulling back. And miners are taking a bigger pullback percentage-wise, which they always do, but they still have the same type of price action. The market's just consolidating. It is in a bullish phase, and it's holding up above all the key moving averages with bullish price action, and we're looking for the market to eventually start to continue to go higher. But we're starting to see people panic out of gold and miners as we speak yesterday and probably likely again today. And that's what we want to see, is everyone getting upset with their metals positions where they're pulling back. Most people, again, got in up here, and that's usually what forms a bottom. So could take a little while longer, but overall we're starting to see that people giving up on their gold trades and getting a lot of fear for the sector, and that's usually a good sign in the long run. If we look down here, we've got a yellow line here. This is our short-term oversold level. This is where we usually start to see the market put in a bottom for about a week-long rally or so. So we'll see if the market starts to grab some traction and go further to the upside. Now, if we look at silver, silver poking down to the 20-day again, we've had the sell-off, a little bear flag, starting another sell-off. This could still continue further down along with gold and miners, but overall the markets are getting a little oversold and they're testing key support zones, and the trends have flipped from, again, this bearish formation. We have a sell-off, a bear flag, sell-off, a bear flag, sell-off, bear flag, and then now we're into rally, pullback, rally, pullback phase in the market. And of course, we broke this significant standout high. We have broken this significant standout high, and now we're getting the first real pullback within this new, more or less, this uptrend in metals going forward, this rounding formation potentially here. Looking over at gold miners moving down yesterday. Obviously, they're leveraged and they move a little quicker percentage-wise. Overall, again, same type of price action. And I'm covering this just because I know a lot of people are panicking about gold action. At this point, again, we had bear action, a sell-off, bear flag, sell-off. It started to show signs. It broke a previous high here. Starting to show signs it's trying to put in a bottom, kind of chopped around for a while, and then finally we got the first push higher where we broke one high, too high. Once you've broken two highs, usually the first pullback and pause is the start of something new. We've seen the next rally. Now we got a pullback. It's just shaking the market up, and we should continue to see another rally and breakout going further. This is a really significant area up here. When we break that, if we break that, it could be a huge run for the miners and all. At this point, we're seeing all this consolidation here. There's a lot of volume, a lot of news up here, people piled in, and we're just getting that unwinding event little bit of a hiccup and some more flush out. And yesterday feels as though there's a lot of panic in for gold traders and minor traders. And I think we're getting close to it is settling into a support area here. So we should find some traction in the 50-day moving average, and we should start to see it move higher going forward. Looking over at, let's pull up the chart of bonds. Bonds are trying to carve out a bottom. Let's just zoom out a little bit here. Again, we had a huge bull flag up into this area. It's tapering down. It's holding this 200-day moving average, this red line. We're looking for it to start to break above the 50-day. We really want to start to see it get some more traction here and break. We've got one high here. We got another little high here. If it does start to break both of those, you could argue here we are now going to be in a new uptrend in price in terms of we'll have broken two previous peaks and we will have a higher high, a higher low, and more or less will be above all the key moving averages, the 200, the 5-day, the 20-day, the 50-day, and we're going to have this falling trend line here that more or less the market will have broken out and is now above it. It's got through there, and we could start to see this build a base and eventually continue to go higher. Looking over at energies, natural gas up 1.6%. It is trying to still carve out a bottom. I feel like we're getting pretty darn close, although it's felt like that for a while. But you can see here we got our lower cycles all came down, clustered into a low. We got close to this level. It's still a flush out down to this level. I think would still be really bullish. Would really cleanse the price even more. But the market is trying to break through here. This will be an important little block here. We're under the 20-day. We've got consolidation through here, a pivot low. We had some pivot lows through here. So this is where it's kind of stuck, and it could very easily pop and have a move up and then flag out for a little bit and pull back. And that's what we'd be looking to potentially get long in this price action once we're above these the 20-day and we see some type of push to a new multi-week high and some type of pullback. Looking over at crude, up 1% this morning. Yesterday it flushed down and continued to flush down a little lower. Overall, it is starting to, it's now somewhat into a downtrend. The only thing really holding it at this point is that the 200-day moving average, and it's oversold. We're getting, I think, just a technical bounce today. We're going to bounce up. We got the 50 and the 5-day. Obviously, the 5-day is our short-term momentum that if it gets up to the 5-day, that's usually where we see the first wave of sellers come back in and drive price down. And of course, we'll have a little bit of a bow tie over the next day or two, meaning the 50-day and the 5-day moving average will be crossing to the downside. And usually when you have two moving averages at the same place, it can be an area where the market will find resistance, extra resistance, and potentially continue to extend to the downside. I'm not a fan of buying something that is oversold and down at support, so I'd like to see some type of bearish price action, but overall, this looks like it might have some momentum to it, and it could just continue to sell off going forward. But we'll see how it recovers today and goes forward for a potential entry to take advantage of falling prices. Last but not least, take a look at the chart of utilities. What I want to look at here is simply the fact that they have been consolidating and they're starting to show some signs of life to the upside. And I find utilities similar to bonds in terms of we'll see bonds and utilities typically start to rotate first. The bonds are on the verge of breaking out and rallying. We've got the utilities index here, our utility sector ETF, showing signs it's threatening to break out above this this trend line and these previous pivot highs over here. So we're starting to see money move into this. Now, obviously, we had a sell-off, a bear flag, a sell-off. It was a nice three-wave correction. It was rallied up. It has consolidated in this range. Now it's popped again, and now it's consolidating in this sideways range or bull flag. And now it's starting to push up again. So we're in a series of rallies, consolidations, and it's on the verge of starting to break out. And utilities is seen as somewhat a safe haven sector. When big money starts to get nervous about where the markets are headed, they start to move into utilities or dividend paying. No matter what happens with the economy, you're still going to need utilities. So overall, we're starting to see those lead the way. They're on the verge of breaking out along with bonds, and that could be an early sign here that the stock market is close to maybe finding a top. And I think we're potentially a week away from seeing that start to unfold. But until then, we've got to stay long equities. At this point, our SSO trade. It has pulled back a little bit in overnight trading. It was trading at our second target of about 5.5% gain. We may pull that money off the table, that portion of the position today. It was tagged in overnight trading. Not sure if it'll get reached again. So it's best that we just probably lock in some gains. So expect a trade alert to sell out a portion of our position and move our stop up to protect it after that. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.